Hello everyone, my name is Muhammad, analyst of Golden Brokers Limited, and today we'll make a review of performance of one of the largest American corporation, which is the Microsoft Corporation. We'll also explore the attractiveness of the stock, the growth driver, technical analysis, and what it has in mind for the future. Before we dive into that, let's check out a brief history of Microsoft Corporation and how it has become one of the most successful brands in the world today. Bill Gates and Paul Allen started Microsoft in 1975 at the dawn of personal computer era to make PC operating system software. And then the company's Windows operating system then came in the mid 1980s to dominate the PC landscape, which then expanded over the year into productivity software, server software, internet service, video games, and PC hardware and accessories. The company is basically organized into three equally sized broad segments: productivity and business process, which include Microsoft Office, Cloud-based Office 365, Exchange, Skype, LinkedIn, and Dynamic. And secondly, the intelligent cloud, which is such as Azure, Windows Server OS, and SQL Server. And more on personal computing, which is the client, Windows client, Xbox, Bing Search, laptop, tablet, and desktop. Since the 1990s, Microsoft has increasingly diversified from operating system market and has made several corporate acquisitions. Their largest being acquisition of LinkedIn for 26.2 billion in September 2016, followed by acquisition of Skype technology for 8.5 billion in May 2011. Microsoft went public on March 30, 1986, opening at $21 and closing at $27.75. The company began to offer a dividend on January 16, 2003, starting at 8 cents per share for the fiscal year, followed by dividend of 16 per share the subsequent year, switching from yearly to quarterly dividend in 2005 with 8 cents a share per quarter and a special one-time payout of $3 per share for the second quarter of the fiscal year. Though the company has subsequent increases in dividend payout, the price of Microsoft stock remained steady for years. Today, the share price was traded at around 260. In April 2019, Microsoft reached the $1 trillion market cap, becoming the third US public company to be valued at over $1 trillion after Apple and Amazon respectively. Microsoft also has the fourth highest global brand valuation. In its performance, Microsoft's stock price has driven up by a staggering 260% in the last 5 years and up 100% in the last 3 years. It then rose around 4% since last year before gradually declining, losing about 20% of its value in 2022. The current bearish spell also comes after 2 years, which during Microsoft share made some powerful gains. In 2021, the software giant stock gained almost 50%, almost double the expansion of the benchmark Nasdaq 100 index. The share's recent pullback hence put investors wondering, is Microsoft stock a buy right now? How long the current sell-off continues is anybody's guess, but there is a strong case to be made that Microsoft stock is a good buy on the dip candidate. The pullback was amid the rush by investors to avoid high growth stock at the time when the US Federal Reserve is aggressively tightening monetary conditions, a move that could push the economy into recession. Among the reasons that the recent sell-off could be a good opportunity for investors to buy the Microsoft share are: the first one is Microsoft is a high-quality, lower-risk tech giant with a wide economic defense. The software maker is among the companies which are best positioned to weather economic disruption as well as have the highest and strongest pricing power to offset inflationary pressures. Secondly, the company is well entrenched in the digital economy due to its diversified business model. There's include a suite of office products, its cloud services, and gaming unit. Thirdly, the company's cloud computing business, which has been a major driving force behind the stock's advance in the past 5 years, a period in which its CEO, Satya Nadella, branched out into new growth areas. This unprecedented streak of gains, according to many analysts, has more room to run. One of major factors behind this optimism is the industry-wide transition toward cloud computing that has only just started. Microsoft Azure unit, which rents computing power to startup and larger business, is able to thrive for years to come. Most recently, Meta Platform also has selected Azure as its strategic cloud provider to advance its AI innovation. On April 26, Microsoft delivered better than expected results for its fiscal third quarter ended March 31st. Microsoft earned $2.22 a share on sales of $49.4 billion in the March quarter. Wall Street has expected Microsoft earnings of $2.19 a share on sales of $49 billion. On a year-over-year basis, Microsoft earnings has rose 40%, while sales climbed 18%. For the current quarter, Microsoft expects to generate sales of $52.8 billion based on the midpoint of its guidance and up from $46.2 billion in the year earlier period. Next, how does the stock seem from a technical point of view? When analyzing the chart, we notice several important areas formed by a combination of multiple trend lines in multiple time frames. A support zone was made at 252.55, and for the resistance areas can be observed at a resistance zone ranging from 289.99 to 318.27, formed from a horizontal line in the daily time frame. In the last month, Microsoft has been trading in 246.44 to 290.98 range, which is a quad wide. It is currently trading in the middle of this range, and some resistance may be found above. The high in the last 52 weeks of Microsoft stock was 349.65, and according to current price, it is 75% away from the 52 weeks high, and the low for the same period was 243, which is 108% away from the current price. The chart also showed that Microsoft has an average volume of 28 million. This is a good sign, as it is always nice to have a liquid stock. So in recent months, trader has faded or aggressively has sold every rally amid a lack of faith in the outlook. So it is uncertain whether gain will be sustained this time around. However, it should be noted that even during the large market turndown, there may be instances where stock bounce back for several days or even weeks as sellers close out their bearish position to take profit before re-engaging short bet once better levels are reached. To be confident that it is not another dead cat bounce, it would be important to see a follow-through to the upside and a broadening of breadth over the next few days. For this to happen, the volatility index, the VIX index, known as the investors' fear gauge, will have to continue to fall and stabilize around the 20 zone. Incoming data will also have to hold up and show up that US economy has to remain resilient despite mounting headwinds, including the inflation, supply chain issue, and softening spending. That's all from me. Until we meet again next time.